All right. Recording is rolling. Welcome back. Thank you guys for another stream today. We're going to be going through a lot. As I was saying before, we're going to look at a lot of setups today. Tuesdays, I usually look for the narrative of the week. We're going to look at Bitcoin. We're going to look at ETH. We're also going to talk about a 12 to 1 gold short that presented itself this morning. I believe Lewis ended up catching a second half of it. We'll talk about a GBP NZD narrative that we are looking at as well. The first narrative that we talked about before, right? That delivery into those equal lows achieved perfectly, right? And then we saw a bounce back up, liquidation, moving back up into supply, possibly more entries, right? More confirmation on this move. We're also going to talk about US 30. We'll do a review and we'll do an outlook for the week. But I want to get this started with Bitcoin, with the behavior that happened today. Casper had a beautiful, beautiful short, beautiful call. We'll talk about what is going on with that. So understanding Bitcoin again, for months now, for weeks now, we've been talking about that delivery, right, into the monthly equal lows as well as the monthly fair value gap imbalance, whatever you want to call it, right, within this area, that space that was pushed so far, that with such force, right, that it opened up the spread, meaning that not enough orders could be filled within this certain move. So we can expect price to come back down into these areas, fill those orders, balance out the market, right? And then we can start to see a possible reversal. So from the monthly to the weekly, again, same exact thing. We can see the equal lows that are presented here. We're still looking for that delivery into those lows, into this area right here. Our weekly structure is still bearish. We can see that we came up, came down, made a new low actually on the weekly. We came back up into that weekly supply candle from the candle before the candle, right? That had broken that weekly time frame right here to the downside. And now we're starting to see reaction off of that. So from the weekly, we can go to the 3-day, right? Same exact scenario. We're doing top-down analysis from our higher time frames to lower time frames, just trying to get an understatement of our entire narrative, bringing it lower to our lower narrative, right? So let's understand what happened here. We had a liquidity raid to the upside. We created a new low, right? So the liquidity raid and the new low, what is that going to call it as? That's going to call it as your new supply, right? That was formed within this area right here. So you have your imbalance from the liquidity raid move to the downside, right? This is a 3-day chart. You have your imbalance that is occurring right there. And then we have our equal lows that are presented as well. So we can see we're taking care of shorts to the upside, manipulating shorts to the upside, leaving those lows, right? So what does that tell us? That we could possibly see lower with our bearish sentiment as well, into those lows overall. 3-day to the 2-day, same exact thing. No bullish structure presented itself yet to me. Nothing that I would look too long quite yet. We can go to the daily now. Same exact scenario. We can see all of these equal lows that are being presented right here. Trendline liquidity, whatever you want to call it, right on this move right here. What is retail doing once they see this pump to the upside? They start to long, right? And then all of a sudden, the reasoning for the continuation to the downside is shown. The highs are taken out. We can see we mitigated that supply zone right here. Remember that redistribution we talked about that created supply, right? We did an entire analysis on this simple area right here that created supply. Did we violate that high that caused a new low? That high that broke this demand zone? No, we did not. You can see that we came up, just rated the highs, still held this high that caused a new low. So we can still see continuation into those weak lows down here. Along with the liquidity that we have, right, inching closer to our monthly liquidity, we can start to get a lot of confirmation on these moves like this. So with that, we can see that that high caused that new low. Let's go from the daily now to the 12-hour. Still no bullish structure on the daily. 12-hour showed that liquidity rate to the upside into that supply zone, right? On your higher time frames, you can look at it like this, pull this out, draw this out. You can see we came up, rated that liquidity, took those highs, took this high, took this high, took this high, and took this high. What does that do? That gets everybody into longs. Where are they putting their stop losses? Right here, right here, right here, right? And what about the ones that don't want to be wrong? The most external point, they don't want to be wrong, they want to be right, they want to take this to 30K, whatever it is. Where are they going to put their stop losses? That's going to find right here, right? Because they're like, okay, this one caused this, it's got to go up, right? It's going to continue to go up. There's no way that it can go below this low. Now all of a sudden they are stopped out of their trade. They decide to short. They short into the liquidity raid, and then we see a move to the upside, right? This is how that manipulation starts to occur, and you can start to sit down and wait for that manipulation instead of trying to find a bias before it occurs, right? Because this will allow now comfortability as well as the ability to now look at these charts with clarity and not look at them as a FOMO or FUD, right, type of mentality or analysis when we are looking to take these trades right here. So I looked at this, right? This was what I drew out originally. I said we could come up, fill this fair value gap, right? Take out all of these highs. What's that going to do? Get everybody in longs. Same exact thing. But instead, we just held that high that caused a new low, and we still could see continuation into the lows from here. So from the 12-hour to the 8-hour, similar situation. We can see that drop base drop that occurred. Again, from our higher time frames to lower time frames, still not showing a lot of bullish structure. 8-hour possibly showing that bullish structure on this move up, but I do not like this move down following, right? What do we want to see as a reversal, or what do we want to see as delivery into these areas right here, right? We want to see price creating lethargic downside moves, creating buy side liquidity, creating reason to come up after breaking structure to the upside, right? So did it show that break of structure to the upside and then show that liquidity being created on that move down? No, it did not, right? We just saw that large move down into these lows right here from the 8-hour to the 6-hour, same exact thing. Not something you want to see delivery into your zones. You don't want to see these closures or these large bearish candles or bullish candles if you are on the opposite end, right, into your zones. That's not going to bring that comfortability that you want to see, and you're going to end up getting in situations where you think you're just longing the bottom, when in reality, you are the liquidity, you are creating that liquidity, and you are now the reason that price is going to continue to the downside, especially within this scenario right here. So Bitcoin still showing bearish structure overall, still not looking for that upside quite yet. That's why I haven't caught out any longs, looked for any longs, talked about longs quite yet. I've constantly been shorting, right, until I am proven wrong. So with that being said, we can now take this Bitcoin, right, 240 minute, this 4-hour chart. We can go to ETH, similar story. Right, let's talk about what happened right here. So I had called, or I was looking at shorts, right, these little scalp shorts that had occurred right here. Ended up getting a little scalp short. I think it was like a 1-to-1, 2-to-1, something similar. And then let's talk about the disapproval theory as well, how we can now maintain and start to get into these trades. Overall, we were bearish, right? We can see that the 4-hour showed a move to the downside, showed another move to the downside. It was creating supply, right? So I was looking for that confirmation trade down into those lows right here. And again, on a higher time frame chart, right, we're still talking about that 2-day imbalance that we have down here. Here's our institutional candle, right, our liquidity rate to the downside. Institutional candles could be found within here as well, but we do have that imbalance, right, just before. So we are looking for that to be filled. We still have reason to come to the downside if we can take out those lows, and then we could see that possible reversal, right? Nothing has changed as far as the overall plan. Since we were right here, nothing has changed. Since we were right here, nothing has changed, right? We're still looking for the delivery until we are proven wrong. So let's talk about a lower time frame trade that occurred right here and talk about that disapproval theory, how we can look to take these. All right, so this was in Global Vibing, we're actually talking about this certain trade right here. I was looking for that continuation to the downside, right? When was I disproved in my trade? Stopped at break even, and then it broke above my supply zone. It actually broke above 2 supply zones, right? 2 highs that caused internal lows. Still held this low that caused an internal high. Broke structure to the upside once, twice. What does that now give you? That gives you, instead of a bearish sentiment, right? This low caused a new high. So this is now your weak high internally, right? So now that you break structure to the upside once, break structure twice within these areas right here, we can expect this high to get taken out. So that's how we can start to get into these reversal trades, even though it is still against us overall on the higher time frames, right? I was disproven in my trade right here. Literally this short broke that structure point to the upside, and then look at that delivery into that demand zone. Right, this is how I can now maintain confidence, right, and comfortability when I'm looking to take my trades, instead of getting frustrated that I was stopped out of this trade right here. Was this a wrong trade? No. Was it a bad trade? No. Was I able to make some profit on this? Yes. Was I able to protect myself? Yes. Everything still came into play, right? I was playing from higher time frames to lower time frames, and then I was disproved. It reaccumulated instead of distributed, right? Now I can prove that. So this is how we can start to get into these trades instead of trying to just stick with one bias over and over again, even though it's not there. Meaning, if you are trying to sit there and call a top or call a bottom and it's not there yet, it hasn't shown you that liquidity raid, it hasn't shown you that break of structure with impulse, it hasn't left an imbalance, nothing is there yet, then why are you trying to catch the top? Why are you trying to catch the bottom? What is that going to do? Just bring stress and just bring that ability or that thought process that you believe you don't know what you're looking at, right? And then you start to get in the loser cycle, you start to get in that spiral, and then it's just over from there. It's just downhill from there. So instead of trying to catch the top and catch the bottom, wait till it's there. Wait till it is there. I would way rather catch this trade on a 1 minute time frame up here or even up here, right, for delivery into these highs right here for a 10, 20 to 1 R&R versus a 1 to 1 or 2 to 1 within these areas right here, right? Because then what does that do? That just gives me, even though I was right? Technically, I was right on direction. I wasn't able to profit as much as I would have been if I just remained patient. That's it. That is literally it. Um, you can have a 30% move on a certain asset, but if your risk to reward is not there, you can't profit as much, right? It's going to be the same way every single time for every single asset across the board. We need to start to catch these confirmation trades, catch these continuation trades versus the bottom, versus that reversal, right? Because then you get into those situations again, like I was saying before, where you just believe you have no idea what you're looking at because now all of a sudden you've made 30 trades in a day, trying to catch the bottom or catch the top, and now your account is blown, right? And you go look back and you're like, oh, I don't know what I'm doing. But you do. You're just impatient. You just didn't have discipline and you didn't follow your rules. That's as simple as it is as far as these setups and these trades come to play. At the end of the day, it will always fall back on your mentality every single time. Whether you're not patient, whether you are FOMOing, whether you take profit too early because you like the money, right? We're trading the chart. We're trading the chart. We're trading to certain price targets, and we are holding those until we are proven wrong, right? So within these certain scenarios, we can see how we can be disproved, as well as start to catch these type of reversal trades just like this right here. So ETH, again, same exact thing as Bitcoin. This one is a little more interesting, I will say, as we are starting to create some type of equal highs, right? We can see possible trendline liquidity. I wouldn't call it trendline liquidity right here, but we do still have our daily sentiment to be bearish. We can see that this high caused a new low after rating liquidity to the upside, as well as filling that daily fair value gap right here. We came up, right, mitigated that area that had caused that new low, filled that wick, whatever you want to call it, and are now starting to see that move to the downside right there after we are manipulating highs, again, leaving lows. What does that tell me? That we do want downside more than we do want upside. Our overall sentiment is still bearish, right? So we're still going to be looking for downside delivery until we are proven wrong. So within these certain scenarios right here, like I just showed you, with being proved wrong, just start to get into those trades. Start to find those setups. And if you are proven wrong, then it's going to teach you so much more. I will tell you this, losses are going to teach you way more than any type of winners. I will be completely honest with you, because that is now going to give you the ability to look back at why you lost, and now understand how you can maintain that and start to get better on your next trade, right? In your next setup, because you're like, oh, what happened last time, right? I wrote that down, I journaled it, and now I understand what to do on the next trade when it comes into play. So when it does come into play, I'm prepared, right? And also, that's why we have risk management. If I'm losing 0.5% uh, on a play, right, and then I go back and I learn that lesson, that is an investment in myself. That's an investment in my ability to now learn, right? And now I can go back on the charts, find those trades. Once I find those trades, I'm more comfortable with entering those trades. I can enter those trades, hold to take profit or stop loss, and then I'm good to go, right? So overall, ETH, higher time frames, still bearish, looking for the downside delivery into those that 2-day fair value gap that we had talked about, imbalance that we had talked about over and over again, right? We had the, I wonder if the path is still on here. Not this one. I think it was this path. Let's try this one. Nope. One more. We'll give it This was far back. I'm not even sure. If I can't find this, it's all good. No worries. We'll click a few more, and then we will end it right here as far as this path goes. It's all good. But anyway, we were looking for the delivery into these highs right here, actually into this supply zone, but we did not mitigate the supply zone. Okay, we did not mitigate the supply zone. We started to have a pullback into these lows right here. We created more supply after we broke structure to the downside, came up into those areas, right? Mitigated that supply zone, that drop, base drop that created supply. Again, we had another drop, base drop after this liquidity rate to the upside, created a new low, came up, took out more highs, leaving lows, right? Looking for delivery into our area below. So ETH, that was ETH. Next, we're going to talk about an XAU trade that had presented itself this morning, right? A little 12 to 1. How I was able to catch this, how we are looking for delivery, and as well as the possible future outlook of what we are looking for as well. So on our daily chart, our weekly chart, right, we've talked about with XAU, let me just go ahead and get rid of that right there, but we've talked about with XAU how this low caused that new high after that liquidity rate to the downside, right? We created a rally-based rally. We can see right here, rally base rally, right? That one consolidation candle, that doji candle. This is that dragonfly doji candle. A dragonfly doji candle is a candle that holds the doji to the downside, more wicks to the downside. Similar scenario to this right here. What does this show you, right? Large buyer power within these areas right here. I like to look at candlestick patterns as well as follow that market structure, supply and demand, and Wyckoff setup, right, that we are looking for every single time. That impulsive move that breaks structure, that supply and demand zone, and then that confirmation of that supply and demand zone of the higher low or the lower high, right? So that dragonfly doji tells me that price was pushed down right here and then pushed up with force, right? We created that consolidation candle, that rally-based rally, and then we broke more structure points to the upside right here on the weekly chart, and that gave us our run and created our range overall. In our range, we started to hold premium a lot, right? Held these lows right here, was showing a lot of equal lows within these scenarios right here, broke structure on the weekly, had that weekly supply candle, traded back into that weekly supply candle, and then we were able to find those shorts, right? That delivery into that weekly time frame right there. I do believe this ran for over 200, but I was out around 181, 187, I believe. Yeah, 228. But within these scenarios, right, when we can catch these continuation trades from a weekly to a daily, 4 hour, 1 hour, 15, 5 minute, and then 1 minute, right, we can start to get into these trades like this where I'm still holding for the weekly time frame, but I'm entering on lower time frames. So what's that going to bring? That super high R&R that we're all looking for, right, to allow for maximum profitability within these charts. So on the daily time frame, we traded into that area right here. We can see we took out these lows right here, created another redistribution after taking highs, filling this fair value gap. Let me go ahead and get rid of this for you guys right here, as well as all of these alerts. I'm just going to delete them for now. I'll go back and put some more on. Move all. All right, so we can see that we traded into that area, into that weekly demand zone. I was looking for a liquidity rate within my demand zone for all the buyers, right? Those limit traders to be taken out of their trades, to be manipulated out of their trades within zones like this. And then on lower time frames, we can see that we did take those lows right there. And I was looking for a possible fair value gap for a reaccumulation for continuation higher. So when I'm looking at this chart at this point in time, I actually don't have the short on this. Let's go back to this layout right here. But this was this morning with the delivery into these zones right here. This was this morning with the 8:30 price target that had hit, right? That New York kill zone that we are looking for, 8:30 a.m. East. Entry came right after that, right? And then we are looking for delivery lower. So let's talk about what happened right here. So this was the short that was presented right here. This was our zone that we had created, right? That redistribution zone. We could say we came up, took out the highs, made that sign of weakness, came up, made a UTAD, and then delivered right into those lows right there. After we delivered into those lows, then we are starting to see lower time frame breaks of structures as well as hourly, right, fair value gaps that are being created right here. We're creating a lot of equal lows just before these areas of fair value. For liquidity rates, I look for the fair value gap first, then I look for the break of structure after the fair value gap is mitigated for the demand creation, and then I look for the final liquidation after that demand zone is created, right? So within this scenario, we would look for something like this when it comes into these lows, break structure to the upside, right? Starts to come higher, and then has that final liquidation, mitigates that demand zone, and continues to the upside. We'll look for a higher high, higher low continuation to the upside. We are in that weekly demand zone right now. This could be due for a very, very, very nice possible reversal. First off, into our area of supply right here, already looking at like a, let's just draw this out. Let's measure this out. These lows right here, 2% move, 41 ticks, right? Literally 4,000 pips. These crazy, crazy moves that we can see that are occurring on gold. I love the volatility of gold. I love how these trades come to play, and that's why I love these charts, right? So with this being said, let's go to our lower time frames. Let's talk about how this trade came into play, how this trade came into effect, and how we were able to take this trade within this point in time. So on the hourly chart, we can see that we broke structure to the downside, started to come back up into that area of supply, this fair value gap, this imbalance within a premium of this high that caused a new low. So that's our new range, right? We came up into that premium. And then on lower time frames, you can see as we came up into that premium, we took out all the early shorts. Now that all the early shorts are out of their trades, we have lows, right? We still have delivery into lows overall. But if we can show that mitigation of these areas down here and then breaks of structures upside, leaving that buy side liquidity, then we could possibly see continuation or a reversal, sorry, to the upside at this point in time. I do like how this is starting to set up due to the equal highs that we are creating on this move to the downside. We can see the trend line liquidity as well on this move to the downside. Retail at this point in time, right, is shorting, 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 shorting. Down here at these lows within discount. Yes, we could still definitely see delivery into these lows right here from an overall bearish sentiment and possibly lower into that weekly zone, right, lower into this large weekly zone that we have right here overall. But we must understand how this trade came into effect and how we were able to take this trade at this point in time. So we came up into these areas right here. We can see we mitigated that imbalance as well as that 15-minute supply candle, and then we broke structure to the downside. We broke structure to the downside right here, right, once, twice, and then we had that continuation. So on the 15-minute time frame, after we took highs, had a bearish engulfing candle to the downside, we now have our institutional candle. So again, the first one is the institutional candle, the liquidity raid, right, after that move to the upside. So this would be your fair value gap in ICT's scenario, right, with stops over this high right here, holding to the low right here. So this is a 15-minute chart. Go to the 5. We can see that delivery, a clean drop-based drop within these scenarios right here. So the reason that I don't play the ICT fair value gap as much is because of these scenarios right here, meaning I like to wait for lower time frame confirmation within the fair value gap, just due to the risk that is applied. That is my personal opinion, right, as far as how I look to take these trades. But we can see that we had that displacement candle to the downside, candle before that candle led right there. It's still following my personal rules, right? Now we can see how ICT and quote unquote SFC, right, comes together. That's why I always say that nothing is new. Nothing has been new for years, right? Since the 1900s, market has been moving like this. Market will always move like this, right? There's no new concepts, no new fancy names, nothing like that. That's going to better your game as far as understanding how the markets move, right? How the algorithms deliver price into certain highs and lows. But within a certain scenario right here, we rated these highs, broke that structure point to the downside, and then came right back up into that supply candle, and then confirmed that, right, on your double break of structure to the downside. What started that, right? After your liquidity raid, we created supply, we came back up, mitigated that supply, and then we continued to the downside. And then we had that delivery, right, into those lows, into that zone that we were looking at right here overall. So a very, very, very simple setup as far as this goes. But let's look at the time as well. Right, the delivery of the time, right, when 8:30 hit. Look at that 8:30 candle, right? That volatility into that zone right there. 7 minutes later, we're in our trade, right? And we were able to hit the first trade right here. So this is something I want to talk about too. I'm gonna go ahead and get rid of this one and just take a look at this trade right here. So at this point in time, right? This would be my most feasible first take profit. And why would that be my most feasible first take profit? And the reasoning from this is because this low caused an internal high, right? So I could possibly see price start to have some type of reversal within these areas right here. And if it did, I would be protected, right, from my first trade right here. So now that I had a break of structure to the downside, I had a weak low that was formed right here. That's my first target, right? If everything is correct, if everything is coming into play, this will always be reached. Always, every single time. And I'm sitting here to tell you this for a fact, because if you are looking at this and doing that analysis to this point in time, that first lower time frame break of structure to the downside, weak low or weak high, whatever it is, will be taken out. So we can now start to protect ourselves within these situations right here, right? Instead of setting my stops to break even, right? I can take profit on this trade to the downside right here, de-risk. So if I'm stopped out, I am either break even, right, or stopped out for a very, very, very small amount. And then I can hold for my overall trend, right? I can hold for my overall narrative, and I can hold for what I'm looking for overall. So at this point in time, again, the same exact thing we're looking for over and over again. Breaks the structures to the downside with impulse after mitigations of our zone, after we liquidate all the early shorts and or early longs for the opposite side. Then we wait for that displacement candle. We wait for the confirmation of that zone. Then we can look to take those trades for the delivery into the lows right here. So that 3-to-1 that was hit in roughly, right, from this trade right here, roughly 10 minutes, I'm good to go. Right, I'm good to go. I can book 2% on the day, and I can walk away from the charts. I can set my stops to break even and or keep my stops, right, and walk away from the charts, look for the delivery goal. And that's exactly what had happened here, right? So these are scenarios where, even though I don't have a 4 hour or 1 hour, right, the full confirmation of that swing, I'm still looking for my overall narrative. I am wanting, right? I'm wanting, and I say I'm wanting because it's not there yet, a reversal. I am wanting a reversal within these areas right here, but if it is not shown, we will still continue to look for shorts to the downside from our overall bearish sentiment that we have on XAU, right? But you can see very, very clean, very simple delivery into that area of supply. Broke structure to the downside once, twice, came up into that supply zone and continued to the downside into the lows, back into discount, right? But now we are creating those equal highs, starting to show that trend line liquidity, as well as delivering back into that H1 fair value gap, H2 fair value gap, this little institutional candle that we had right here. After this liquidity rate to the downside, we could possibly see a reversal at this point in time. Because of that buy side liquidity that is being built up, we're starting to create some possible reason to now make a move to the upside. But within these certain scenarios, we must continue to follow that trend until we are proven wrong. So within this point in time, if I'm shorting, and then I'm proven wrong, right? If I'm shorting, and then I'm proven wrong, and it ends up taking out these lows right here and breaking structure to the upside, and I'm stopped at break even or stopped out for 0.5%, whatever it is, I now understand. I now have the lesson. I now have that lesson, right? Excuse me. And then price is coming back into these areas right here. I can look for the confirmation of that higher low, right? That lower time frame, then break of structure to the upside, and I can look to now take that trade and target the buy side liquidity at this point in time, right? Because this low caused this high, we can expect this high to get taken out if this low is held, right? And we continue to break structure, continue to show that demand, and continue to give reason to now move to the upside at this point in time. So XAU, I do like the clean setup that we are starting to have, as well as that midweek reversal, right? Tomorrow's Wednesday into Thursday as well, looking for a possible midweek reversal. If the entire week, right, we've just been down, 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 then we're looking for that midweek reversal, as well as we can have the confirmation on the price action, right? And then we can look to take that trade targeting that week high overall. So that was XAU. As far as that goes, we're going to go ahead and get into GBP NZD now. Pretty funky chart actually, but I do like how it is setting up. So let me just go ahead and get rid of all of this right here. So I'll do that later. It's all good. We'll just go to GBP NZD right now. We'll talk about what is happening. So on GBP NZD, we did a whole sentiment stream and whole sentiment analysis from the literal monthly to the 1 minute as far as entries go on this certain trade right here. But let's go ahead and talk about what we are still looking for, right? We had a liquidity rate to the downside. We had taken out the lows. We left the 4-hour fair value gap, but now we are starting to move back into premium. Right, here is your candle before candle that broke structure to the downside on the H4. We can look at 6, filling that fair value gap as well, coming into these areas, coming into that area of imbalance. I'm looking for the highs to be ran within this scenario, looking for a possible distribution, right? Manipulation of highs within this area. I'm going to personally be watching H4 as well as H1. H4 is showing that bullish internal structure as far as this goes, creating higher highs, right? Higher lows within these scenarios right here. And then once that low is broken to the downside, I can look for my 1-hour confirmation after mitigation of the supply zone from that creation of supply after we run highs and break structure to the downside with displacement. Then I can look to take my trade for the delivery into the next sell side liquidity target overall. We can look at the weekly chart, right? It looks like a large liquidity rate to the downside. But we still have these areas down here that we are still looking to get filled overall for a possible reversal, right? If I'm disproven within my trade at this point in time, or it holds a discount, ends up filling this area of fair value, and then has that reversal, then I'll look for that higher low that's being created within these areas right here. But for now, we're still looking for shorts to the downside, trading back up into areas of supply, trading back up into areas of fair value, right? And then we could possibly look for that continuation to the downside. Beautiful, beautiful wick fill that we have right here. This wick shows me that there's a lot of liquidity, right? A lot of unfilled orders within this move right here to the downside that we can come back and possibly fill, right? This is a large move. Go ahead and draw this one out as well as far as the price target goes from even here, this wick right here. All right, roughly 661 pips, 4% move to the downside. Beautiful, beautiful opportunity that's going to present itself as far as GBP NZD goes. I do like how this setup is coming into play. The only thing with GBP NZD I will say is that you will probably have to risk less as it is an exotic pair, so these spreads will be a little bit higher than your normal crypto, right, or forex as far as that goes. So looking to take these trades, do make sure to risk less as this comes into play. I will be posting entries and exits as far as this goes, and with gold. And then once that is into play, once that is set up, then I'm good to go. So GBP NZD, very, very beautiful setup that is starting to come into play. If I'm disproved, right, then we can look for the reverse side. So pretty simple as far as these quote unquote as smart money concepts, right? These institutional concepts and what we are looking for. So GBP NZD, beautiful setup that's coming into play. Once it does come into effect, entries and exits will be posted as far as that goes. So I do want to get into US 30 now, and we'll talk about US 30 possible um, reversal, right? What we are looking for. We could see delivery back into these areas of supply that had caused that new low for continuation to the downside. Again, that midweek reversal starting to come into play. We'll be looking either tomorrow or Thursday for those entries as far as that goes. But on our daily chart, we are still bearish. Weekly chart, we are still bearish as well. Monthly chart, we are still bearish as well. Right, but on the weekly chart, something that interested me with US 30 was this area right here. So you can see we broke this high that caused a new low. Where's your candle before that candle that did that, right? We have a zone of weekly demand. Is there an imbalance that just above it as well? Yes, there is. We're starting to fill that imbalance, right? So there's two scenarios that I would look for here. If we fill this imbalance, we don't mitigate this demand zone, and instead we reverse from here and come up into this area of supply, then I'll look for the continuation into the demand zone from the downside. But if instead we create buy side liquidity and continue to deliver into this area right here, start to show that manipulation of lows that break a structure to the upside with impulse, right? After coming into these zones right here, draw it out like this, creating equal lows in our zone, right? Those limit orders that are trying to open trades or set limits, whatever it is. How many times? This is something that we'll go over in a second, actually. Don't worry about it right now. But waiting for the liquidation rate to the downside, break a structure to the upside, confirmation of that higher low, right? And then we can look for that reversal into those areas higher overall. But something that I wanted to mention, right, when I'm talking about these limit orders on zones, is I always wait for the manipulation of my zone for that entry, meaning how many times, right, have you had a perfect setup or something similar where you have a reversal, right? Maybe take some highs right here, reverses to the downside, creates that drop base drop, goes down, break structure to the upside. You have your fair value gap, you have your demand zone that's created, it goes higher, starts to reaccumulate, takes out the lows, right? Mitigates that demand zone, and then continues to the upside. How many certain scenarios have you had a zone like this, right? A certain zone like this or something similar that you set limits on right here. How many scenarios has that happened? And then you go back 2 hours later and you're stopped out, but price went your way, right? So you were still correct on direction. You still understood that. I guarantee you that has happened plenty of times to anybody who does play limits or anyone who is looking to take certain trades like this. It's happened to me, happens to everyone, happens to any trader, right? Who wants to use that ineffective time management as far as let me just set a limit, walk away, and I'll just hold for however, right? Um, Personally, we're going to look for the confirmation. Why? So I can make more within less time and do less, right? I don't need to send out more. I only need to send out a few because then that now allows you, right, to profit on less and keep that clarity as well as that job-based mindset. So I'm not scanning, right, for 400,000 charts or 400,000 plays. Instead, I'm just looking for one delivery on one asset. And if it isn't given to me, right, then I can walk away from the charts as well. But how many times have you had scenarios where you see a move like this, right? And then you get stopped out of your trade and then the price actually goes in your direction. So something that I wanted to talk about with this as far as these zones go, whenever I see these zones, right, and have these zones, I look for the inducement, right, the manipulation of the zone, and then the actual break of structure after. Why? Because this is old orders, meaning it comes down to these areas, fills those limits, and now that those limits are filled, we don't have new demand yet. I'm looking for new demand to be created within this point in time. There is no new demand that is created on this mitigation and this move to the upside right here. All it was is a liquidation rate, right, and continuation to the downside. And now that I have that manipulation of that zone, as well as that break of structure to the upside after, right, with impulse, we come back down into discount of this certain move right here, come back into discount, break structure to the upside. Now I have the creation of demand. Now I have that W, right, from here. That W that is being formed on this move right here. I'll draw this in red in a second. On that move to the upside. The first break of structure, the second break of structure, showing me that demand has now been created on this push to the upside right here. This is now going to allow for a lot of clarity as well as patience when you are trying to get into your trades, because now instead of trying to time it, right, or catch the bottom within these certain scenarios, just say, I'm going to set this limit, I'm going to walk away, right, see what it does, and now that I'm stopped out of my trade, I'm going to short it to the downside. What happens? They're the reason. Exactly how this works every single time. Breakout traders trying to take this to the downside, right? They have their limit cells right here. What are they? The reason to continue to the upside. Where are they going to set their stop losses at this point in time? Let's put a short position right here. Where are they going to set their stops? Right here, and right here. They are the reason that demand is now being created with this move to the upside right here. It's not going to move, right, just based off of even market structure, even Wyckoff, whatever that is, right? It is moving as far as delivery to liquidity with our structural narrative. So we are looking for liquidity every single time. Once that liquidity is ran, we can look for the break of structure and up in either direction with displacement, look to play the lower high or the higher low in premium or discount. And then once that's being created, right, once that demand or supply is being created, we can look for confirmation of that zone on lower time frames to then play the reversal at these points in times. But very, very little simple kind of innuendo that I wanted to share with you all, because I know this has happened to most of you who play limits or who have played limits in the past, right? I've played limits in the past. This has happened to me plenty of times to where I believed that I thought it was right, and I actually was right on the direction, right? But I was stopped out of my trade, and then I was like, what happened? How am I doing this wrong? And this is why I'm doing this wrong. That manipulation, right? We need the new demand to come into play. We need the new supply to come into play as far as that goes. That's why I look for the liquidity rate, and then I look for the break of structure with impulse. So that was a little innuendo right there. We're going to go ahead and delete this. We'll get into US 30, the lower time frames as well. We were just talking about the weekly. With that imbalance, we're starting to fill that imbalance. We can come down, possibly mitigate this institutional candle, show some demand that's being created, and then look for a possible reversal. Again, it is starting to near October, November, and December. That is when we start to have more influx of money, more influx of liquidity into the market, and we start to see some type of moves as far as that goes. So again, it's all starting to line up, right? All starting to come into play, but until it is there, we are not looking for those reversals. We're looking for the continuation to the downside over and over and over again until we are proven wrong, right? Again, this will allow for that clarity and that comfortability when looking to take these trades. The short right here, right, delivered all the way down into these lows right here. Came back up, took out the highs, filled that fair value gap, broke structure to the downside again, created more supply on a drop-based drop that had violated this demand zone right here from this low that had caused a new high. After it had did that, broke structure to the downside again, came back up into that supply zone, started to deliver into the weekly lows as well as that weekly demand zone and that weekly imbalance. We can now see, right, that clarity that comes into play as far as the direction, the most recent order flow, and not this back here or this back here or this back here, right? We're not constantly always looking to the left. Something that I always did at first, right, and that had started to confuse me was I was always looking to the left. And what does that create? And this is actually something that I would show you with EU real quick. So let's just look at EURUSD. Throw on the FXCM, right, where you get into situations like this to where you see this move to the upside right here. And let's just delete this. Take away all of that. But you see a move to the upside right here, and you're like, oh, break a structure, break a structure, break a structure, demand zone. Right? Or break a structure, right? This candle before. Like, it's going to go to the upside. It's going to reverse. You look at the daily. You look at the weekly. We can go into replay mode. Take this back. All right, let's look at the weekly. Let's look at the monthly. And you're like, demand zone, right? Rally base rally. Filling imbalances. We're gonna go up from here, right? We're gonna go up. Is it there yet? Is it shown yet? Has that break of structure occurred after the liquidity rate to the upside? Has the confirmation of that zone occurred after, right? No, it has not. This is a monthly and weekly chart. So until a weekly chart shows me a break of structure to the upside with impulse, leaving that area of fair value, that area of imbalance, now, I'm not looking for the reversal. Over and over again, same with XAU. We talked about how we were looking for delivery lower into weekly lows, into monthly lows until we are proven wrong, right? Supply was created on these moves to the downside right here after this first break right here, second break right here, came back up into that area of supply that had sponsored the move to the downside, broke more structure points, had a redistribution, accumulation to then distribution, created more supply, made a move to the downside right here. We now have our next range, right, that was created on that move, came back up into premium, ran the highs, broke structure to the downside. We have our next supply zone, came back up into that supply zone, and now we see the delivery. Now, instead of looking for this, right, even over here, look at the reason that people made this look at the reasoning for the downside, right? Look at the reasoning for the continuation to the downside. We saw a large move to the upside right here with impulse. This is a monthly chart, so we saw weekly possible break of structure to the upside right here. But all of this demand zone's job was to deliver into that supply zone from our overall bearish narrative. So stop trying to catch those reversals. Stop trying to catch those bottoms. Stop trying to catch those tops. Instead, play the chart for how it is, and you will see how much more profitability you will gain besides trying to catch those huge moves over and over and over again, right? Because now you're just stuck in some type of loop of maybe if I hold this for a few days, right, then I'll gain that 10% that I'm looking for on my funded account, whatever it is that you are looking to trade, how you're trading. But we need to understand supply and demand's job, right? We need to understand the entire order flow as far as that goes and the quote unquote real supply and demand. Because I will say there are traders out there that talk about supply and demand a little bit differently than I do, but if you apply an institutional mindset as far as that goes after a liquidity rate occurs, then you can find that real quote unquote supply and demand as far as where price will actually mitigate, where price will respect, and where price will go after that. So monthly chart, right? RBR right here. Weekly, right? Shows a move to the upside after liquidity rate to the downside. We can go to the daily chart. Data point was unavailable. It's fine. Let's bring this back right here again. But understanding this, right? People see this move to the upside and they want to catch that bottom. They're like, it's lower than it's ever been. It's making new lows. This is daily. This is a monthly. It's going to have a reversal, buy side liquidity, buy side, buy side, buy side, trend line liquidity, whatever it is. They're making up reasons for price to continue to the upside when it's still showing that bearish narrative, right? There's nothing that is being shown bullish about this move to the upside right here. Look at all we did here. Possibly broke structure. We had a wick, right? Then we had a new high that was created in this zone right here. So this is our area from this high to this low right here. Draw it out like this. All we did was come back into premium from a high that caused a new low, raid the highs, take out all the early shorts, and then break structure to the downside. We have our next area of fair value. Right, the next imbalance, lower time frame confirmation within these zones on EUR USD. And then watch what happens after. Delivery lower into those lows. So instead of trying to catch those bottoms, trying to catch those reversals, play the trend until you are proven wrong. If I was proven wrong within this point in time, right? If I played this short, tried to take it to these lows right here, it came down to here, and then broke structure to the upside, right? Then I would be disproved. And now I can look for longs, and this would be a distribution to then accumulation, a reaccumulation after taking out lows. And I now have that disproval, and I can now look for the continuation within these areas right here, right? That reaccumulation, I can look to take this trade to the next area of supply overall, right? These highs right here, taking out this weak high as my first take profit, right? And then into areas of supply. So you can't tell where price is going to go until it is shown, until that narrative is shown. Then you can't sit there and call that as far as that goes, right? We can sit here and talk about XAU, how it was 2-3 months, but that wasn't necessarily called, right? That was a idea as far as the weekly chart. This was the same delivery, the same idea, the same market structure, the same supply and demand, the same idea on the weekly chart. All I saw on the weekly chart, right, was that we just broke structure to the downside. So we came up, created lows, right? My brush went away. But we created lows, we took out the highs, and then we broke structure to the downside. Right, so on the weekly chart, from my higher high to higher low, I had an area of imbalance. Right, so overall, I was just looking for a higher high, higher low, continuation to the upside on the weekly chart as far as XAU goes, right, for delivery into those areas, then a break of structure to the upside, and continuation overall. All it was, right, is just applying the same mentality, applying the same concepts from higher time frames to lower time frames. So now that I go on the weekly and the monthly chart and I say, okay, this is my price target, this is the price target for the chart, where it is going to go, I can now look for confirmation of lower time frames into that area, right? A break of structure to the downside, another break of structure to the downside, mitigation of that zone. I can now take entries on lower time frames into those areas overall. So now we have our higher time frame narrative. I can use my lower time frames to then confirm that. This is how we can start to gain that comfortability and gain that clarity. All right, that's it. I am literally getting into my. It's going to be this weekend. Done with it shutting off. I have no idea why it does that. I think it's because I don't have anything playing on in the background or anything like that. But keep continuously taking those trades. Keep continuously looking for the delivery of the overall narrative until you are proven wrong. That's the biggest lesson that I kind of have for you guys today as far as what you want for yourselves as a trader. Because now at these point in times when you are proven wrong, that's going to teach you so much more than being right. Because what happens to a trader when they come into the markets, right, the first time, and this actually happened to me, right, when they come into the markets for the first time and they say, oh, whatever it is, right? Maybe they're taking signals, whatever it is, and they make like 1,000% on a weekend, right? I actually made, I think it was with Playbit, I made when I first joined the first weekend that I had like $150 in there, and then 2-3 days later, and this is when crypto was popping for the second time, sitting at like 1,500 in the balance. I was like, this is insane. Like, what is this trading stuff? Like, I love this. You know what I'm saying? But what does that give you? That gives you a tainted image of what trading is for. I saw it for the money right away, and I said, "Oh my goodness, I just made this amount in this weekend, right? This amount of time, whatever it is," and that gave me a tainted image of how trading actually worked in the beginning, right? Because now all of a sudden, I'm just shorting everything, longing everything, hoping to make what I made that weekend before, right? I said, "Oh, I just made a bunch of money. I can do it again. Watch this. I'm gonna catch this bottom, right? And this is how this is gonna work." And then all of a sudden, liquidated, right? Your accounts are liquidated. You're losing money, and then you're like, "How did this even happen? How can I look to better myself, right? What's even happening at this point in time?" And now all of a sudden, you quit. You either quit, right, or you decide to get up, understand trading for what it is, understand that this is a long-term game for consistency overall, because you want to sit down, and everybody who is in here, I'm sure, wants to do this as a job, wants to do this on their own, wants to trade full time, and wants to be able to have that time freedom that trading allows, right? Especially with that profitability that you can gain from trading. It's a beautiful, beautiful, beautiful game. Beautiful, beautiful, beautiful game. But if we don't show that discipline, if we don't set our rules, if we don't treat it as a business that it is, right, then we'll get humbled every single time. We will be humbled every single time. That's just as clear and as understanding as it can be, right? As far as these charts go, as far as this delivery goes. So stop trying to catch these bottoms. Stop trying to catch those tops, right? Wait till that price is shown. Wait for your structural narrative to come into play, and then once that is shown, go ahead and take your trade, TP your stop loss, and once that happens, right, walk away from the charts every single time. Once you start to do this, once you start to find a time as well, a session time that you sit down and you can periodically do this over and over again, then you're going to become so much more comfortable as far as taking trades and as far as treating this like a job. Because now you come and sit down at the charts again. I say this every stream, but you come down and sit down at charts at the same time every single day. Once that setup is given into play, you're good to go. You take your trade, set TP or stop loss, right? And then now you've made that 4 or 5% without even thinking about it, right? So these are these scenarios where instead of trying to catch those bottoms again, like I was saying, we can now find the structural narrative overall, play the structural narrative overall until we are disproven, right? So that was your USD as far as that goes. I just wanted to show you guys that as an example because of that continuous delivery over and over again. XAU, again, same exact thing as far as that goes. Right? They see this large move to the upside and they're like, institutional candle, demand zone, demand zone, demand zone. I'm going to take this to the upside. This is a weak high. How is this a weak high, right? There's no break of structure to the upside after mitigation of this zone on the weekly time frame to call my monthly pullback yet. Nothing, right? No confirmation. So why am I trying to catch a bottom within these areas right here? Instead, I'm going to short right here. I'm going to short within premium. I'm going to short within premium. I'm going to short right here. Shorting right here. I'm still shorting, right, within these scenarios because I have yet to be disproven down at these lows right here. I have yet to be disproven on my bearish bias, right? So until that is shown, then I can take my trade if that is shown, and then we can look for the possible reversal. Again, I will say this, market is 80% continuations, 80% continuations, 20% reversals, 20%, okay? So 80-20. It will always continue until that reversal is in play. So if I'm looking to catch continuation trades, I have 80%, right? A lot more opportunities than I do these reversals. So stop trying to catch those bottoms. That was something that I had to tell myself, right, when I first got into trading, when I first got into these smart money concepts. And even when I got into it at first, because you had situations, right, where you learn order blocks, you have a break of structure, and then you're looking for the continuation to the upside, right? You have an order block or something like this, but this could just be a liquidity rate. So instead of waiting for the confirmation of the zone, price could continue to the downside, right? So within these certain scenarios, within looking for these trades, within looking for these setups, don't play it until it is there, until that higher low is formed. Until that high, look right here, shorting right here, right? Breaker structure to the downside, liquidity rate to the upside right here.
I was trying to take it to the downside. I was disproved on that trade, right? After a little 12 to 1, little 13 to 1 down to these lows right here. Disproved on that trade. Price came to the upside. I went and looked back at it, said, okay, maybe it created some demand, right? Maybe it showed a move to the upside. Maybe it created some demand. I should take this to the upside if this is a weak high. What does it do instead? Just mitigates the supply zone, break structure to the downside. I have yet to be disproved, even though, right, I was break even on this trade right here after that 14 to 1. So it's completely fine that you can start to get into these scenarios and actually understand, right? And take those losses. Just risk less. Just risk less. Take that stress away. Risk less, risk 0.25, risk 0.5% on your trades. And then once you go back and understand that 0.5% on a 12 to 1, right, made 5-6% for the day, then you're good to go, right? I personally aim for 2.5 a week, right? Because that's 10% a month. 10% of 100,000 a month is literally, right? 10% of 100,000, you're making that $10,000, right? Take home 8. That's completely fine as far as most prop firms go. $200,000, take home 16,000 for the month. Are you okay with that? I would be okay with that, right? If you can't live off those means, then I obviously don't know all of your situations, but personally, if you can't live off of $16,000 a month, right, then you should probably reevaluate how you're spending your money as far as that goes. But that is completely fine. If you're focusing on 2.5% a week instead of even 2.5% a day, then you will now start to allow yourself to only take high quality setups, because now you're looking for less and you're looking for something that checks every single box. Again, like I was saying last stream, about the whole airplane co-pilot thing, right? If you're a co-pilot and you go to fly a new plane and there's a new pilot there, and or not a new pilot, a veteran pilot there, and he only flips 2 to 3 switches and then's like, all right, let's go, let's take off. You're gonna sit in him and be like, dude, what are you doing? Like, that's what are you doing? We're gonna crash this plane because you didn't flick every single switch. You didn't get everything safely, right? All of a sudden, you now have turbulence, you now have all this stuff going on, and the plane crashes. Plane is your portfolio, right? So if you can click every single switch, if you can always click every single rule, make sure all your rules come into play, then you will start to maintain to get these high quality setups. If your rules aren't working for you, right? If your strategy isn't working for you, you can see why in the charts. You can go back now that you have your rules and say, okay, I'm going to adjust this rule. I'm going to add a new rule. Or I'm going to take off a rule, right? You can now start to hone in on your style instead of being so all over the place and so overwhelmed as far as how you are looking to take your trades. But with that being said, that was just a little psychological thing that I wanted to tell you guys before I did end the stream here. Entries and exits will be posted on all of these pairs that I am posting. GBP, NZD, XEU, USD, and ETH. Possibly, right? Possibly US 30. Still going to be waiting for New York session as far as that goes, but that midweek reversal could definitely be coming soon. We'll look for the liquidity rate, the break of structure with impulse, and then the confirmation of the higher low. If it is not shown, we'll just continue to take it to the downside. But again, thank you everybody that has joined. I'll leave this up for like a minute or so if anyone wants to ask any questions or anything similar. If not, that's completely fine as well. This was recorded and will be posted to YouTube following. But I appreciate all you guys joining tonight, and I hope you all have a great night. But yeah, is there any questions or anything like that? I'll just leave this up for like 60 seconds. No, I can feel free to add me anytime. All right, don't believe so, don't believe so. Sounds good. Again, I appreciate everybody popping out for the night. I appreciate all you guys trying to get that information, trying to better yourselves as traders and people, right? That's why I love trading, because it's such a mirror of how you make decisions and how you take certain emotional factors into your life. Super, super, super valuable, right, as far as lessons go. With this being said, again, thank you everybody who had came out, and I hope to see you all this Thursday. Peace out, y'all.
Yo, shout out all the real ones. Shout out El Chapo, College Crypto, Dude Luke, Eldon, Frizz, Hug 4C, that boy RB, the fucking GOAT, man. Justin Solomon, Justin P, Lewis T, shout out that boy Milf, shout out fucking Perzap, Say No Mas, my boy. Sharks Thing, new names in the building. D-Way 131, what the fuck, bro? ETH, my dog. Last but not least, Zytec, bro. Y'all boys be fucking safe out there. Don't get liquidated. We're in the fucking Tokyo session right now. Shit is going
Yes, sir.
bananas.
Let them know.
Sir.
Hey, shout out Long Way. Shout out Long Way. Appreciate y'all, boys. Y'all have a good one. Peace, peace.